I suggest that we move on to, as custom dictates, for those of you that have been around Interact, especially in the physical version, starting with the presentation that many of us have been eagerly anticipating, which is essentially the results of the 2020 AdEx benchmark survey, with this time even more 2021 market predictions. And there's no one better or better trained or more informed to do that than our chief economist at IAB Europe, Dr. Daniel Knapp, that I'm sure all of you are aware of his work and his output. So Daniel, the screen is yours. We are all incredibly eager to hear what you have to say.
Thank you very much, Constantine, and a very warm welcome from me. It is a special year conducting this AdEx benchmark study, which we have been doing since 2006. And there was one other time when I was slightly jittery looking at the numbers, and that was, of course, in 2008 and 2009. And I was very pleased back then that despite all doom and gloom predictions, the market in the financial crisis after the Lehman crash continued to grow. We're in a very different environment, of course, right now, because the market is much more mature. Digital in many markets is the, in terms of ad spend, the medium or set of media, you really have to say, with the highest share. So there's a lot of responsibility and a lot of budget invested. So one could think that this would mean more risk, more volatility. And we have at IAB Europe, if you followed our work, we've continuously reforecast and reassessed the impact of COVID-19 on the ad market in 2020, but also we've thought about how this industry, how this entire ecosystem might be recalibrated after we come out of the pandemic. Today, I really want to focus on our AdEx benchmark study, which we are launching today, and weave my predictions into these numbers because they are, I think, as rich as ever, as we have added lots of details and granularity and revamped the study to really accommodate the changing market environments. We are surveying in total 28 different countries in Europe. So it's round about 95, 96% probably of all ad spend. We've got a few holes to fill, as you can see here, but we cover nearly everything. And this is a very important study because it's not just any market sizing study, but it is done in collaboration with all the IABs, all the countries usually listed here. So what we do is we do a meta-analysis. We take the local deep expertise that all the IABs have with their methods and ways of obtaining the data. We harmonize this and enrich the data, in particular when it comes to social platforms and so forth, to provide an apples-to-apples holistic view across the digital media investment landscape in Europe. So that we in Europe can benchmark, as the name suggests. We can figure out what works, what doesn't work, and also learn from countries that are succeeding. When we're starting out, we started out from a very bad place. So I call this the ladder of hope. Last April, I first started to predict how the digital ad market was going to shape up in 2020. The signals weren't good at all, and there was hardly any visibility. It was doing forecasts on quicksand. And although I've been doing this for a decade, this was really an exceptional environment where it's very hard to draw on the established repertoire of econometric forecasts and benchmarking and so forth. And we thought digital was going to fall off a cliff. And if you look at the press and if you look at initial company results coming out, that seemed to be the case. So we are forecasting 12.1% decline in April for 2020. But then the Q2 results came out and things were surprisingly better than we anticipated. So our August forecast, we shaved off quite a lot of this pessimistic view and thought that there might be a faster recovery for digital. We had the issue that digital ad spend was, in a sense, faster switched off than other media in March and in April, because it's a switch on, switch off medium. You can very quickly adapt your media plan. And we thought that's going to be highly problematic with the maturity of digital is going to decline. But market signals were different. And as the year progressed, our January forecast actually went to the other side, and we said there's going to be a 4.1% increase. Now, having crunched the data from 28 different countries, we can even say that de facto, so the actuals are a 6.3% year-on-year increase in digital advertising in Europe during this hard year of 2020. And that means we're at a market of 69.4 billion euros, nearly 70 billion. And we have, over the last couple of years, progressed ourselves up in terms of GDP comparisons with countries. We started at a country, the 100th country in the world in terms of GDP. Now we are at number 63, 64, in line above Oman, in line with Sri Lanka GDP. That's how big the digital ad market is in Europe. So we went from bad to better to actually a surprisingly good performance for digital advertising in 2020. And yes, it is the slowest growth since the first AdEx study to contextualize this, but it's still a strong performance given the very tough macro conditions. We were growing fast in the financial crisis than now, but that was also because digital advertising had a much lower share of the overall advertising pie than it has now, with 56.5%. So the annual growth rate, the common annual growth rate was higher in the previous years, and we slowed down. But given the circumstances, given double-digit declines in other media, it is a testament to digital advertising and also how digital advertising fits in and has adapted to and must adapt to changing consumption habits, which are going to stick with e-commerce, etc. Digital advertising is poised to take further share and further growth in this environment. And indeed, it wasn't just like this at the aggregate picture, but we can see that out of our 28 markets, 24 actually posted growth, and some 7 of them actually even double-digit growth. And yes, you can see this growth is in emerging markets, in CEE markets, which have a lot of kind of organic growth. You can see, for instance, in Ukraine and in Serbia, we had much less strict lockdowns than in some of the Western countries. But you can also see that countries like Germany, who in 2020 still went quite well through the pandemic, actually posted double-digit growth. And only 3 markets declined. Belgium was flat. Spain, we know, was very hard hit with several national lockdowns, regional lockdowns, very, very strong case numbers. Belarus had a very particular situation with a quasi-revolution in the country. So these are all factors beyond, in part, beyond the pandemic that explain this performance. Now, if we contextualize digital advertising a little bit with other media, we can see something remarkable. We see a fast forward acceleration. We see high single or even double-digit share gains of digital advertising during the pandemic. You can see digital advertising expanded its pie of the overall media from 2019 to 2020. And if we look on the right side, we can see by how many percentage points this has happened. Typically, on an annual basis, you've seen digital advertising take 1, 2, or 3 percentage points of other media, and it has grown cumulatively in that way. So this was really a rupture, where with changing consumption habits, with lockdowns, with the rise of e-commerce, etc., we saw a accelerated, rapid shift towards digital budgets. And this is reflected across countries in our benchmark study. Now, if we zoom in a little bit, we can see that there isn't just one market. There are 28 different markets, which are typically for Europe all quite different in structure, in trading culture, in which formats prevail and so forth, but also in terms of size. We can clearly see how the market is dominated by the UK, Germany, France. Russia in the last couple of years has recorded an amazing growth from the 10th position overall in terms of size now to the 4th position. But it's important to zoom into the long tail of the other markets as well, smaller countries, but with often, in case of Denmark, Norway, extremely mature ad markets with a very strong playbook in terms of video, digital first markets, and other markets that are smaller, particularly in CE, which are growing rapidly. Now, if you follow the news in the digital ad industry, you've heard the term cohorts, and I couldn't help but try to group our AdEx countries into their own little cohorts. This bubble chart here very neatly shows the different performance of the ad markets. The size of the bubble is the size of the market. On the x-axis, you have a sign of market maturity, which is digital ad spend per capita. And then you've got digital ad growth on the y-axis. And you can clearly see how these markets differ. Let's go through it. We have the UK, kind of very separated from the rest, very mature, a huge digital ad market. I'm going to call it a giant in macro terminal. It has moved away from the other markets to be its own thing, really, in terms of performance and size over the last couple of years. But this year, with the lockdowns, with the pandemic, it has grown below the European average. We have a second group, which are the kind of wealthy and decelerating countries, where you got the Nordics together in Sweden, who have been tightly clustered for about half a decade. They've always moved together in conjunction when it comes to growth and maturity. And we again see them decelerating as they mature, even despite the fact that, for instance, in Sweden, the economy was fairly open during the pandemic. Another group which is remarkable are what I call the maturing risers. We had markets like Germany, for instance, a very big television market and big media market overall, in the last couple of years growing in line with or below the European average. This is different now. It's the first time, in a sense, that Germany is growing faster than the average and got a tight cluster of other markets around them, all kind of apart from the Czech Republic, Western European markets, which are growing above average. You got, though, what I would call the slow West markets that are stuck or were stuck in a low growth phase. You have the relatively mature Netherlands and Finland, but then also France heavily hit by the pandemic, Italy, of course, and Belgium as well, who are underperforming. Another group, I already mentioned them, experienced stronger, often more diverse headwinds, which were decelerating in 2020. Another group with kind of mixed challenges, mainly CEE markets, and then kind of a fast and the furious group, hyper growth markets, in particular Turkey and the Ukraine. So although we talk about Europe, there are very different markets with different market maturity, with different growth trajectories, and also local issues and opportunities. Let's move from the markets to the formats, because digital advertising isn't one thing, it's an umbrella term for many different formats. We changed how we looked at the digital ad market, in particular, given the rise of social. We used to put social and display in one bucket, but increasingly that was obscuring the real underlying trends. So we try to separate this out in much more detail to isolate where growth is coming from and where investment and improvement opportunities lie. So we can see this umbrella here right in action. We can see on the left classifieds, directories, and affiliate, which we put in there as well, minus 9.1%, the only digital ad format that kind of nearly declined double digit. It's logical. The job market was stagnant. Large purchases like automotive weren't happening as well. So we saw that market heat up again in Q4, but it was lagging longer than others in the recovery. Search really was the poster child of the 08-09 recession due to its performance nature. And it, despite its market maturity, continued to grow, heavily impacted by travel, which didn't happen anymore. So that's why the growth is slightly slower than in display. In display, plus 9.1% sounds great, but if we look in more detail at display, there are two markets really. There's the social market, which grew extremely strongly, fueled by all these macro trends I outlined, and other display, which barely grew 3%. So the market structure looks as follows. We got search as the biggest aggregate format, display in total larger, but we split it in social and other display smaller, and then we got classifieds and directories. And this was a journey that was long in the making. So if we take a macro view, we can see how overall classifieds and directories were losing share, and display was coming in. But if we zoom in, we can actually see why we made this new split between display and social. If we zoom in from 2017 onwards, we can see the rising power of social, and actually the non-social, so the other display, stopped gaining share in 2019, being slightly displaced by social. Now, within this segment, excluding social, there's some interesting trends as well. So there's an overall sectoral shift towards video, away from banners and static formats. This video is broadcaster video, pre-roll, mid-roll, post-roll video, but it's also outstream video. It is fueled in part by the still very nascent in Europe, we shouldn't forget that, CTV market, but predominantly it is on laptops, tablets, mobile, and so forth. And for the first time, we're including in our study the audio market. Audio has been talked a lot about quite a bit, but it's a very small market and was slightly forgotten during the pandemic in terms of the weight it has. But for the first time, we got data on audio from 11 markets, and we were able to extrapolate how big the market really is in Europe. And it is 500 million euros in 2020, fueled by around about 7-8% podcasts, bit of radio, but the predominant bit is online music streaming services. And that grew again a healthy 16.7%. and we expect this growth to continue, and expect the audio market to gain pace to reach around 1.5 billion by 2024. For the first time, we're also looking more deeply at programmatic. And if you ask someone about a definition for programmatic, and there are probably as many answers as there are markets in Europe. And when we look at our markets that we survey, nearly each has a different definition. There are two buckets. There is one, which I would call the automation bucket, which is programmatic, so the open internet plus walled gardens. So in a sense, social and open RTB together. That is increasingly obscuring the real dynamics, particularly if we're looking after what is the growth on the open internet? What is the growth now in the context of the demise of third-party cookies? What is the growth when we look at the important role that media pluralism plays and sustainable publishers? So this is why we're only looking at programmatic right now, excluding the social bit. And we can see that although the overall display market, including social, was fairly stagnant, the programmatic bit was growing strongly with plus 7.6%. And we can see more and more a displacement of the non-programmatic, of the IO-based stuff, as programmatic continues to gain share, now at 50.7% of all display. And here we can see how social conversely looks like. We saw social grow more strongly at around 16%. But again, different dynamics within social. We can see a massive shift this year towards video. So it's not just Facebook anymore, but we're seeing massive growth from Snap, from TikTok, but also from Instagram. And in the next couple of years, we see this going to continue, in particular as social becomes shoppable. With the integration of brand and performance advertising in one view is going to be one of the main growth drivers of social going forward. Very different market trajectories, but we can see double-digit growth in social in most of the markets we've looked at. And when the full study is being released, you can also see how the social size and the share looks like across all the markets. In total, if we zoom out to kind of overall display, we can see 13 markets have double-digit growth, so still healthy growth here again, and more markets than just the CE markets. For instance, if we look at Germany, Ireland, the UK in display, also very strong, although it overall underperformed, mainly being dragged down by classifieds. So a broad range of markets recording double-digit growth. And video, and this is the crucial driver. This chart here shows how much the display growth is in non-video, what we call traditional, and in video. And you can see how different the trajectory is. These markets here are now ranked on video growth, but you can see how growth is half or less than half or even declining if we factor out video. So video with over 16% growth, we can see on average has a 3.4 multiplier to overall total display growth, fueled by, yes, social video, but also open internet, in-stream, broadcast services, AVOD services, etc. And now video exceeds more than half of all display spend in 3 markets already, which means they are video first markets. And others on average, last year it was around 33%, so a rapid rise in video, again, to nearly 40% of all display ad spend being video. If we zoom into search, we can see quite a different trajectory where there are less markets growing strongly. Predominantly, it is the Eastern European markets, and there's a combination of market maturity in many, in particular in the Nordic markets, but also in the UK. The severity of lockdowns affected search due to lack of travel, and overall the economic impact of COVID-19 beyond the lockdowns has muted search performance, and budgets have more shifted to social instead. At classifieds and directories, we can see a very different picture where most markets were actually in decline. And that is, of course, because of the weak labor market and, of course, of the high household savings as people weren't spending on big ticket items. Yet there's strong consolidation in the classifieds market, in particular when you look at what some large European groups are doing, what a Schibsted is doing, what an Axel Springer is doing, and this will create synergies in the future. And we predict very fast rebound when the economy opens in 2021, and a lot of economies of scale for the directories market. We put some affiliate in there, but that's only around 15% of the total. Now, from formats to devices, it's no doubt that with the rise of social, we have passed a tipping point. And that was already in 2018 for display. and we saw it a bit later for search as well, where the market is mobile first. This is very important to remember now that we're talking about the future of browsers, we're talking about Apple IDFA and so forth, where the real struggle of the future is. We can see outside of mobile a decline both on the display and both on the search side for desktop, and double-digit growth for mobile. And we expect this to continue, although we see it petering out slightly in search as the screen real estate isn't as large and the kind of map-based features for search discovery are still underdeveloped. A little quantified outlook on the market. There are many moving parts. We saw 2021 start slower than the exuberance of Q4, where we saw up to 30% growth in markets that were previously severely affected by the pandemic. But Q2 is, of course, very easy in terms of year-on-year growth due to the massive dip that we had in 2020. So there's going to be a mechanical rebound. But we're already seeing some good signals for Q3 and continued growth in Q4. It's also clear now, after lots of speculation, that the consumption changes we've been seeing, they are not temporary, but they're often structural. And this means it's a fantastic opportunity for digital to continue to grow and to continue to capture eyeballs, drive people to store, and so forth. So we're expecting a 9.8% growth year on year for the overall market in Europe to around 76 billion euros. The important thing to remember, though, and with that I'm going to pass back to Konstantin, is that the COVID pandemic and the changes we've seen there, that's really only the first inning. It's only part one of the transformation that digital advertising is undergoing. It was a period of forced innovation, of bringing marketing, business transformation, and paid media together to deliver business outcomes, yes. But the industry is now driving its own structural transformation. And it's such a large industry with 69 billion euros in spend, it also has the responsibility to do that, of a transparent supply chain, of ethical advertising, an ecosystem that works for all, for consumers, for publishers, for buyers and sellers. And that's why we call it the Digital New Deal at Interact. With that, I'm going to give back to Konstantin. Thank you very much.